Hello traders, today we are going to introduce you to Camarilla strategy. So before moving into this Camarilla strategy, let us understand what a Camarilla is. Same like you have the pivot point, Fibonacci pivot point, standard pivot point, Woody's pivot point, Camarilla is also a pivot point. Camarilla consists of resistance levels, support levels and a center pivot line. So Camarilla pivot point is an indicator that allows you to recognize key price levels. You can recognize the entry point, you can recognize the exit point, and you can also set your stop loss. So this is the beauty of this strategy. With this strategy, you know the entry point, you know the exit point, you also know where to keep your stop loss. So let us see what Camarilla strategy is. Camarilla pivot is resistance support lines calculated using the previous day high, low and close. So same like any other pivot, it uses the previous day chart to calculate the resistance and the support lines. Since I said that it is a strategy using resistance and support line, you know that Camarilla strategy is a breakout strategy. So why breakout strategy? Imagine this is a resistance line and then you have a support line. Okay, the price is trading at this point, let us imagine. And the price is slowly moving up. And what you can see is that at this resistance level, either the price will come down, the price might consolidate a little bit over here, or the price might break up. It will break out of this resistance line. So this breakout is where you trade. Similarly, if the candles are moving down, the price is moving down, there will be a breakout on the downside, which is called a breakdown. So this breakdown strategy is also a Camarilla strategy. So basically Camarilla is a breakout bar breakdown strategy. Now this is the calculation which is used to calculate the resistance and the support lines of Camarilla. Now how do you calculate this? I'll explain it. Now imagine that this is a candle. Now you all know where the open, close, high and low of a candle is. Now imagine this is a green candle which is a bullish candle. Let me write it green. So imagine this is a green candle. So now you know that this is the open of the candle. And here you have the close of the candle. This tip of the wick is the high of the candle. And the bottom point of the wick is the low of the candle. So now here you have open, high, close and low values, which is also known as OHLC values. So let us calculate R4. R4 is close plus high minus low. That is this close plus the value of high minus low. This is low, which is multiplied by 1.1 by 2. Now this is an additional formula which is used to calculate this resistance and support lines. So here you have calculations for R3, R2, R1, S1, S2, S3 and S4. Now most of the trading charts provide you these formulas, so you don't have to calculate it daily and draw the lines individually in the chart. You can get it from the indicator column, which I will show you in the TradingView platform how you can take this indicator. So that I will explain when I move on to the chart. I hope now this is clear. So this is the calculation of resistance and support lines, which you don't have to by heart. But then you have to know this, how it is calculated. Now, like I said, Camarilla is R1, R2, R3, R4, S1, S2, S3, S4, and there will be a center pivot line also. But in this strategy, what we use is we use only R3, R4, S3 and S4. That is, we use only resistance 3, resistance 4, support 3 and support 4. So you don't need R1, R2, S2, S1 or the pivot line. So these all can be switched off. Now in certain indicators, what you can also find is that R4 will be known as H4, R3 will be like H3, S4 will be L4, it should be L4, and S3 can also be known as L3. So H3 and H3 and H4 is called high 3, high 4. Okay, and L3 and L4 is low 4 and low 3. So once you plot R4, R3, S4, S3, you will get 4 lines like this. Now, in order to understand better, what you can do is you can give R3 and S3 the same color, which is blue, or you can give whatever color you like. And R4 and S4 can be given the same color. Here I have given black. So now the basic idea behind the breakout strategy is, imagine the candle is forming over here in the morning. You will wait, you will not take entry anywhere in between R4 and S4. You will not take any entry between these two zones. You will wait for the candle to give a very good close above R4. Okay, this is a breakout strategy, so you need to use, or you need to understand how to trade a breakout before moving into this strategy. So once you get a strong close above R4, what you do is, in the next candle, when the candle is moving up, you take an entry immediately. Where will you keep stop loss? You can keep stop loss just below R3. So this is how you do it. Just below R3 is where you keep stop loss. And then you can exit at the next resistance zone, which you can either use R5 on the upside or any trend line which you have drawn, and on the bottom you can do in S5 or any trend line which you have drawn. Now if the candle is coming down, what you will do is you will wait till there is a strong close below S4. Until and unless you find a strong close below S4, you will not enter into trade. Once you see S4 is crossed, S4 is breached, and when you see that the next candle is crossing this candle low, you will immediately enter into trade. Where will be your stop loss? Your stop loss will be just above S3. So now with this strategy, you have an entry point, you have a stop loss point, and you have a target. So this is how you take trade according to the Camarilla strategy. Now let us go to the chart and see how this works. So this is a chart of Reliance 5-minute candle. And let me show you how to plot the Camarilla indicators. Now for that, what you have to do is you have to go to the indicator column, and in here you have to click pivot points. So you get pivot points standard. This is what you get as soon as you type pivot on the column over here, search column in the indicator and strategies window. Click the pivot point standard and you will get a screen like this. Now this is a trading view chart. This Camarilla strategy or the Camarilla pivot is available in almost all the brokers chart. And once this pivot is plotted, what you have to do is you have to go to the settings. Once you go to the settings, like I said, we only need S4, S3, R1, R3 and R4. But before that, what you have to do is you have to change the standard pivot to Camarilla pivot, right? So you go to the input column. This is where the input column is. You go to the input column and in the type window, when you click, you will get a series of options. Here you have Fibonacci, you have Woody, you have Classic, you have DM and you have the Camarilla in the bottom. You have to select the Camarilla. Once you select the Camarilla, you go back to style. You don't need the pivot. You don't need the S1 R1. You don't need the S2 R2. What you require is only S3 R3 and R4 and S4. So like I mentioned in this table, I have colored R3 and S3 in blue. So what I'm going to do is I will change the color into blue. Now I have selected blue for S3 and R3. And for S4 and R4, I'm going to select black color like I have mentioned over here. So now you have two different colors for the 3 and 4. 3s are blue in color and 4s are black in color. I hope you understand this. So after I select black, I press OK. And then this is what I get. You don't have to change any other settings. Now, even if you go to 15-minute chart, what you can see is that the resistance and the support levels are the same. There is no change in the resistance or support levels of Camarilla. But what we use here is 5-minute chart to trade in Camarilla strategy. Now another important thing what you have to take care is you don't enter into trade in these type of Camarillas. Why? Now you can see the range of S4 R4 is wide. This is very wide. And you can also see that the range between R4 and R3 is also wide. So imagine if you are going to take a trade in this area. Where will you keep your stop loss? Now your R4 is at 2024.50 and your R3 is at 2004. So you have almost 20 points different. That is 1% difference between the R4 and R3. So whenever the range of R4 and R3 and S3 and S4 is too huge, do not enter into that chart. And then what you will do is you will avoid this. And when the Camarilla is far, that is wide, you can also see that the market will be range bound. So when will the market be? When will you have a trending market is when the range is very low, very small, right? Now this range was small, but then the market did not move much. But still what you could see is that first here you could see that the S4 was crossed, but you will not take a trade because there is no good close. And then what happened is you saw a very big candle. Now this range is also too far. So what you can do in this scenario is, in order to reduce the risk, what you can do is, if you are entering here, what you can do is you can keep your stop loss just above S4. Now since this is a very big candle, what you should avoid is you should avoid these type of trade. This is a very huge candle, and whenever huge candles are being formed, this is the time when most of the pro traders exit. So when you see this big candle, most of the momentum is already been used, and finally if you had entered over here, you could only take a profit up till here, right? So you avoid this trade. So you see that it was a narrow Camarilla day, and most of the time it was a sideways day. But then the next day it happened to be a trending day. So here you can see that this is a candle with a proper close. Here also you could see that the candle closed, and then what happened is you could have entered over here. Now we tried moving up. Now where will be your stop loss? Your stop loss will be just below this. And as you can see, though it came down, what it did is it consolidated and then went up. Now let us see how many points you have between R4 and R3. Now R3 is at 1952 and R4 is at 1967. I would say that this is also a wide CPR. This is a wide CPR. So your risk to reward ratio is not good enough. Avoid trading in these type of chart even if you get a good move. Right? Just in case if you see that here you entered and if the candle reversed and crossed R3, your stop loss will get hit and the loss will be huge. What we should always give priority is to reduce the risk. Now here you can see that the stop loss is very less. So even if when a breakout was there and if the candles reversed, even if your stop loss get hit, the money you will lose is very less. That is the idea behind trading narrow Camarilla pivots. Now again let us move on to the next. Now see over here. Now this is a small range. What you can see is R4 and R3 is very small. The range is very small. R4 is at 2036 and R3 is at 2026, 10 points. So you enter over here and what you could do is you can see where the next resistance is. If this is the next resistance, then you exit over here. And now here also you can see that the first candle tried to cross R4, but then after that it came down, it took you could see a consolidation and then again a breakout. Now after a consolidation, if a breakout is there, that breakout will work. Now even if you keep your stop loss just below R4, when it crossed, it has never touched R4. It has never touched R4, and till this candle, the candles did not cross R4. So you could have taken a decent profit over here. But what you could see is that the Camarilla level, the range is too high. So what you need to identify or what you need to search for is the Camarillas like this. Now let us see in Nifty how this is working. Here also you can see that the level is big enough, but still after the breakout it went up. So every time there is a proper breakout, it went up. Now here what you can see is that after the breakout it consolidated, it didn't move up, it did not move up, though the Camarilla was narrow. Finally it came down and it hit your stop loss. So you should expect this also in the market. This also you should expect in the market. See here again R4 and the price moved up. Here you will not enter into this candle. Why? Because you could see that the wick is big. When the wick is big, that means there is a reversal which is happening, right? And then what you could see is that you could see it trying to break again, but then again it moved up. So in this market, you should stay away. There is a chance that this might go down, but better is to stay away, because you can see that the Camarilla is wide. R4, R3 is wide, S4, S3 is wide. You will only enter into trades where S3 and S4 is narrow. Now in this it is narrow. It's narrow than this. You can see that R3 and S3 is inside. Right? It is small. So here you can take a trade. Where will you take a trade? If you had taken a trade over here, you could take this profit. Then finally it moved up again, and then it closed over here, but this candle did not cross this and it went up. So you will again wait. You will wait till this candle close. Now this is a very big candle. Taking here is risky, but then if you had taken at this level, your stop loss will be just above S4, so that even if the candles comes back, your stop loss is hit and you lose only a small amount of money. But what happened here? Again, the price fell down. So now why did this move happen? Because this R4, R3, S3 and S4 was inside the previous day's range. Now the previous day Camarilla was high, very big, wide enough. And the next day Camarilla was small, in a smaller range and inside the Camarilla. So only the candles moved below S4 and gave you a good profits. Now, how do you identify narrow Camarillas? There is a screener which is available and which will be shared to you to select the narrow Camarilla. So once you get that screener, what you have to do is you have to screen it daily in the evening, shortlist the stocks which you are planning to trade for the next day. Start with 2 or 3 stocks. Find out how the movement is. Find out, practice Camarilla. After a few days of practice, you will understand when and how the candles will move, and then take a trade accordingly. So this is just a strategy where you have to use your ideas to trade. Do not blindly follow this strategy and every time when R4 is crossed, take an entry, and then if the candle reverse, you will hit a stop loss. Why? Because you also have to understand the candles. Now here what you can see is this is not a strong close. So what you will do is you will wait. But then what happened is the next 2 candles are taking support at R4. Now this is a candle which is taking support at R4. Now this is a good sign. When the candles move up and take support at R4, then it is a good sign. Now this is not R4, this is S3. So here there is no entry. But then over here what you could see is that the candle crossed, but the next candle went up, but then it is taking a good resistance at S4. So you can take an entry over here, right? But where will be your stop loss in this? Your stop loss will be above S3, which is not a very good risk to reward ratio. So risk to reward ratio is also something which you have to be looking on when you are trading with this Camarilla strategy. I hope you clearly understand what Camarilla strategy and how to trade in Camarilla strategy. If you have any doubts, please feel free to ask in this group. The admins will be ready to help you anytime. Thank you very much.